All right, let's get back to Andy Xie, independent economist, live out of our studios up in Hong Kong. Andy, we left off saying that, look, companies are likely to take advantage of the much more healthy market conditions right now to raise additional capital or fresh capital for a rainy day they see coming soon, although they'll never say that. So they're taking advantage of this opportunity. I guess what you're trying to get to, without sounding too alarmist, is investors need to be aware of this so they are not taken advantage of. Is that right?
Yeah, I think that for investors, especially for fund managers, they have their own momentum in a market like this. If you have cash, and when somebody is coming, an IPO or placement, you're likely to buy into that. So I think that the market like this can be taken advantage of, and I think investors are not going to do well. The two sectors in particular need a lot of money. One is the financial sector, the other is the heavy industry sector. Both the financial sector needs money for obvious reasons. The bad assets will rise over the next 12 months. So they know that they need a lot more capital. For heavy industries, they expanded it very rapidly in the last few years. Now the demand has really collapsed. It's not coming back for the next few years. And if you don't get money now, you probably will go bankrupt. So that's why I think that all those shipyards, all these steel mills, and they need to come to the market to get money as soon as possible.
Okay, and specifically, is it this this rush of companies coming to the market looking for money and the resulting supply or possibly even oversupply, is that what's going to trigger markets to correct at the end of this bear rally, do you think?
Well, I think that, yes, it's going to take the market down in the summer, but this is not the end. I think in the second half, the economic fundamentals will improve, mainly due to stimulus. And that's when we might see another rally. But I think that, again, that will be a bear market rally. Next year, I think the asset markets will all make new lows, mainly because that inflation will start to appear. That will remove the last hope for everybody, that is the liquidity. The central banks have been able to pump a lot of money to cover up the problems that were exposed by the bubble bursting. And because inflation is relatively low, so they'll be able to do a lot of that. However, we're seeing signs of inflation coming up, like oil prices now pretty high. Commodity prices have recovered a lot. And labor unions are demanding wage increase again. So I think that next year is going to be really tough.
And is the risk or the worry there that because of this inflation situation, central banks may actually be forced to start raising rates?
Yeah, I think so. I think next year, central banks will be forced into raising rates, even though the economies will still be sluggish. But they will raise interest rates slowly because they are terrified of pushing down the economies. So we'll be stuck with inflation for a few more years. The most likely scenario for the world over the next few years is stagflation, I think.
All right. Doesn't sound good. Andy, listen, always a pleasure talking to you, sir. Thank you for your thoughts, also your ideas. Andy Xie, an independent economist, joining us live from our studios up in Hong Kong.